Ladies and gentlemen, good day and welcome to the Sealmatic India Limited earnings conference call for the financial year ended 31st March 2024. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Ladies and gentlemen, please note all content on this earnings call is for informational purposes of a general nature only and does not address any circumstances of any particular individual or entity. Do not construe any such information on or material as legal, tax, investment, financial, professional, or any other advice. Content on this earnings call does not represent or constitute any solicitation, inducement, recommendation, endorsement, or offer by Sealmatic. Any information, materials, statements, and or data set out herein is subject to change anytime without notice, and as such, no reliance must be placed on fairness, accuracy, completeness, or correctness of any information and materials contained on this earnings call. I now hand the conference over to Mr. Umar A.K. Balwa, Managing Director of Sealmatic India Limited. Thank you, and over to you, sir.
Thanks, Michelle, for this introduction. Good evening and a very warm welcome, ladies and gentlemen, to this third earnings conference call of today. Before I begin with the formal address, I take this opportunity to express my heartfelt gratitude for taking the time out of the busy schedule and accepting our invite and to be part of this call. I would also like to express our gratitude towards our shareholders and the keen interest expressed by investors and analyst community in our company, Sealmatic. As I have already briefed over the two previous earnings calls about the company and our journey in the business of mechanical seals, and hence I will not get into specifics of that matter. Sealmatic succeeded in increasing its turnover by around 21% to INR 728 million. This shows that demand for Sealmatic products is very strong and is being driven by markets in India, Europe, North America, and the Middle East. A quick on the outlook for the financial year 2025. For the financial year 2025, Sealmatic expects year-on-year organic order intake of 20%, which will lead to efficient operational profitability. Our continuous investment into research and development drives our commitment to keep evolving our capabilities as a sealing technology leader. Certain pivotal developments in the Middle East, Europe, USA, and India, we are currently expanding our business to support various OEMs and end users. Our global markets, export to 53 countries, have demonstrated a longevity along with year-on-year growth, and they will remain essential even as new markets will emerge in the future. Strategy beyond 2028, together with the new regional heads in India, Middle East, Europe, and USA, we have created a strategy 2028 and beyond to ensure we continue to meet customer needs and expectations as we maximize our long-term growth potential. Sealmatic 2028 vision has pivotal philosophy aimed at growing the company profitably. Sealmatic's experienced leadership will drive performance improvements to operational excellence. This will enable us to increase efficiency, strengthen our customer focus, and grow more profitably. Business overview and company perspective. Based on the PTRs that we have as credentials, we have been selected and are sought after companies to deliver high critical mechanical seals. To name a few examples, the Rumaila oil field, which involved high critical API 6 mechanical seals, the lift irrigation project in Andhra Pradesh, which involved the largest split mechanical seal ever produced in the country, the ISL Mathura Refinery OISD project, which involved intricate and demanding application in a refinery coupled with installation and commissioning of mechanical seals for high temperature applications exceeding more than 350 degrees Celsius. These projects are to name a few, and the body of work undertaken by Sealmatic is commendable and respected globally. The footprint of Sealmatic is ever expanding, with key assets being deployed at strategic locations. For example, in Pune, we have a team of 5 people now. In Chennai, a team of 3 people. In Kolkata, a team of 3 people. Baroda, a team of 3 people. And in Mumbai, a team of 11 people covering the entire market of India. In addition, we have established sales and service office in Dublin, in Ireland, to oversee the markets in Europe, and in Houston, USA, to oversee the market of North America. The collective potential of both these 2 regions is $2.25 billion, and we are making a very serious commitment in these territories. Strategic partnerships have been arrived upon in high growth areas in the UAE. We have signed an agreement with Habshan in October 2023 to look after the UAE market. The market potential in the UAE is $60 million. In Thailand, we have signed an agreement with the PSS Group in August 2023 to look after the market in Thailand. Market potential is approximately $40 million. In USA, we have signed agreement with Ecotech in September 2023 to look after the USA market. The market potential of USA is $1.25 billion. The market in Middle East has presented us with many opportunities due to the approval ad hoc, which Sealmatic attained in the shortest possible time frame, and this opens doors for us to participate in projects that are envisaged in excess of $50 billion, spread over a period of 5 years. Similar efforts are being put by our team in Oman, Qatar, Kuwait, and Saudi Arabia, where initial reports and findings encourage us to make strategic partnerships and long-term investment in these regions as well. Most importantly, the market in Russia was a closed door because of its very protective nature, but due to the conflict in the Ukraine, that market is now open for us, and we have made significant progress over there. Thus, participating in exhibitions such as the Neftegas in April 2024 in Moscow and the PCV in October 2023, the response that we garnered at both these exhibitions was overwhelming. We see a lot of traction in Russia in the coming years with profitable business. The business area of defense and nuclear is now well covered by achieving the certification of ISO 19443, which is nuclear, and DGQA, defense. It would be noteworthy to mention that Sealmatic was the second company in India to get ISO 19443 certification and also to get the coveted DGQA certification for defense through a very stringent process. Having achieved both these certificates, it has paved way for us to penetrate the coveted markets, which are long-term, profitable, and sustainable. We have established a team of engineers who will exclusively pursue this business in the defense and nuclear sector. Sealmatic has invested and will keep investing heavily in reaching out to markets and geographies for which it has participated and will participating in important industrial exhibitions such as the Defense Technology Exhibition in Chennai, Pump Symposium in Houston, ADIPEC in UAE, Dahej Industrial Expo, Egypt in Egypt, again OTC in Houston, Chemtech in Mumbai, ACHEMA, which is just coming next Monday in Germany, Pump Symposium, which will come up in August in the USA. And so I've just given you a brief overview of the activities that the company has taken and what we foresee in the future. I will not go on a rant and will not hog the limelight. I will now hand it over to Ratan Kandare, who is our CFO, to share important vital details about the years that went by.
Thank you, sir. Good evening, ladies and gentlemen. Dear shareholders, we are delighted to present the financial result of FY24, which shows robust performance on an annual basis. Our sales turnover in FY24 stood at 71.01 crores, which is an increase by 21.31% as compared to previous year of FY23, where the sales turnover stood at 58.54 crores. We have earned a profit after tax of 9.86 crores during FY24. We have achieved the EBITDA of 15.94 crores during the FY24. Out of the fund raised, some of the expenses are debited to profit and loss account as per the generally accepted accounting principle, and the benefit of such expenses is likely to be available from FY26. Likewise, we have debited the marketing and development expenses around 4.86 crore to profit and loss account, which result in reduction in profit and EBITDA. Accounting standard does not allow us to capitalize in marketing and development expenses, and therefore to comply with the accounting standard, we have debited such expenses to profit and loss account. If such expenses are capitalized, we would have earned a profit of 18.4 crore, which amount to 25% of our total income, and EBITDA would be 20.80 crores, which amount to 28% of our total income. Thank you.
Sir, should we start with the Q&A session?
Yes, just one last paragraph I would like to address to all the people who are attending this call. I would like to extend great appreciation and thanks to you, our shareholders, for all your support, and your employees, customers, and partners, without whom none of our achievements would have been possible. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and 1 to ask questions. The first question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
Hi, sir. You had earlier guided that we would see a 60% growth in the revenues in FY25. So are we still on track for that?
Mr. Singh, yes, we are very much on track with that, and hopefully we'll surpass that target of FY2025.
Sir, so what kind of margins are we looking at in FY25?
As Ratan would have mentioned in his small introduction, that had we not taken certain expenditure into revenue, our EBITDA would have been 28%, even in the current year. But the accounting practices didn't allow us to do that because there was a change in law. So we expect our EBITDA to be in the range of 24 to 26%, depending on the kind of project activity that we'll undertake.
All right, sir. So we expect this marketing expenses to continue this year as well, in the same amount or higher than the previous year?
It could be lesser because the kind of participations that we have done in exhibitions, I'm sure that it will get us the desired result, and we won't participate in all the exhibitions which we participated last year. And some of the exhibitions only come once in 3 years, so probably those expenditure would be lesser in terms of marketing. In terms of sales, reach out, they would remain constant, I would say.
All right, sir. So what kind of contracts do we have with the customers? Is it order basis or do we sell on spot? Can you please throw some light on that?
There are certain rate contracts with OEMs, but generally it is an order-to-order basis. That's how the industry functions over here in India and globally.
All right, sir. So what kind of pricing contracts do we have? So, I mean, for example, if the order is for, say, next 3 months, if there is a price increase till we supply, is there a pass-through contract or is it fixed at the time of when the order is placed?
I'm sorry, can you be more specific? I didn't get the question.
Sir, so do we have can you throw some light on the nature of the contract? So, I mean, is the contract generally for a one-time supplier, say, of a given amount of quantity? Or does the order entail some period, say, for 6 months, you will keep on supplying to the customers? And in that case, I mean, if the price of raw materials go up, do we have a clause to increase the prices of our final product and pass on the increase in raw material prices to the customers?
I'll answer this question in two parts. The first one is that the order that we get or the contract that we have are orders which are divided into two categories. One is the OEMs, which is the pump and rotary equipment manufacturers, and the second is the end users. So when we talk about the end user, that's an order which will keep repeating, because if my seal is fitted into an equipment of an end user, that will have an annuity of, say, till the lifetime of the equipment, which is 25 to 30 years. So those orders will keep repeating year on year. As regards to OEMs, it is based on project to project basis, and certain times we have rate contracts which are fixed for 1 year or maybe 2 years down the line. So that is the kind of business. Now coming to the price escalation, fortunately for us, we don't sell our products on the cost of raw material, so it is always sold on technology. So the cost of raw material is not so significant for us as an impact if it increases. So that's not a criteria for us. And there is no inbuilt clause in any of the orders where there is a price increase and we get an increase. So that's not a question over here. We sell by technology, not by cost of raw material.
All right, so got it. So what is the current order book position as on date?
It is healthy as compared to our target of achieving 20% intake of order intake. So we are on track on that.
Sir, what is the total addressable size of the market in our industry, and who would be the leaders? What would be our position in the market currently?
The Indian market is close to about 1,900 crores, and the global market would be $4.25 billion.
All right, so who are our main competitors out of India in this field, and what would be our position, in terms of revenues in the industry?
If you talk about the competitors, there are three big boys whom we call them as three companies which are only present everywhere, not only in India but globally. So you'll find these three names. So these are three international companies, and if you want the names, I can give the names as well. One is Eagle Bergman, the erstwhile company which I started out in India in 1989. The other is Flowserve, and the third one is John Crane. So these are the three competitors who would be present everywhere. And as regards to our market share, it is difficult to quantify a percentage because we just started out our journey in India in 2020. And as regards to OEM and project business, we just started out in 2022. So it is too early to say, even put a figure. So that would be too premature.
Got it, sir. Sir, and you were commissioning some capacity around Q4. So has that happened? Additional capacity?
Yes, that is happening as we speak, and we would be, get fully integrated by end of June or first week of July.
So when can we expect it to be at optimal utilization, and what would be the revenue potential from the new capacity?
See, optimum utilization also depends on a lot of other factors, such as getting a trained, employee structure over there, and also, getting them to fully integrated into the systems that we have over here, because we follow very stringent regulations. So to get this capacity fully integrated and to get a revenue out of it, I would say it would add 65% to the current turnover.
65% to the current turnover. Okay, that's the revenue potential from that new capacity.
New setup in Common.
All right, sir. So the total revenue potential from the new and existing capacity would be how much?
It's again a very complicated question to answer in just one sentence. It all depends what kind of configuration of business you're doing. So if I have more of end user business, which I always keep saying and keep emphasizing that FY2027 will be a golden period for Sealmatic. That's when our end user business will kick in. So it depends. If I'm only doing end user business, from my current capacity I can do 200 crores. So it depends. You have to take into account how much of project and OEM business you're doing, how much of end user business you're doing.
Sir, if we look at the current composition only of end user and OEMs, in that capability, what would be our revenue potential from the new as well as existing capacity?
I would not like to go there because that's a question. I'm sorry to say that's a question which is a bit irrelevant at the moment because the configuration of business is going to keep evolving and changing. So if I give a figure today, it will be a very incorrect figure.
Well, what is the proportion of OEMs and end user currently, and how do we see it panning out in the coming year and the next 2-3 years?
It will remain the same between the OEM and the end user because I am a new entrant and I need to take as many OEMs and projects which will result in getting the end user business. So that would be 50-50 at the moment.
All right, sir. Got it. Thank you very much. I'll join back with you again.
Yeah, my pleasure.
Thank you. The next question is from the line of Vinay Agarwal from Sri Venkatesh. Please go ahead.
Good evening, sir. Thanks for providing me the opportunity. Sir, in regard, we have received a project certification from.
I'm sorry to interrupt. Sir, your audio is not clear. May we request you to use your handset, please?
Yeah. Now it's clear?
Yes, sir. Please continue.
We have now received approval in Middle East. We have also received a certification from Russian market also, and we have now approved for defense also. So going forward, could you provide any color in regard to what kind of growth trajectory we could foresee 2 or 3 years hence down the line?
I would be, conservative and say let's take 3 years down the line. Just going by defense, it should have 25, percent of our turnover because that's a huge market, but it's a long term. It takes its own time. It's more bureaucratic. You need to go through various layers. So that's one question. As regards to the Middle East, we expect a good amount of turnover, which would be in the range of say 25 crores in the next 3 years' time.
So overall, what kind sort of growth we could foresee going forward in 2 or 3 years down the line for the company? Currently, we have received a lot of certification, and we have done a lot of marketing also. So what sort of growth we could foresee 2 or 3 years down the line?
Say 3 years down the line, it would be safe to assume that we would double our turnover.
And sir, one last question. Recently, we have received a project worth rupees 15 odd crores. So in this project, sir, do we have operation maintenance contract also we have for future?
Well, Mr. Agarwal, let me try and explain this in a very layman's term. So this is like how we have the Kodak film and the camera, where you get the camera free, and then you charge for the reel, for the negatives, and for the processing. So here, what happens in a project typically? Say, let's discuss this project which is called Mongol Refinery. So we will execute this project by say the last quarter of this financial year. So by March or April 2025. We would be completing the execution of this project. It will get assembled at the pump OEM's site, and it will be transported to the refinery in Mongol. Say 3 years down the line, when the plant gets commissioned, any product which has come as an OEM remains as an OEM. So with Mongol, I will have, say, example, 200 pumps which are fitted with the Sealmatic mechanical seal, and that itself is going to generate a revenue of $2 million every year for us. Profitable business.
Sir, how long it would be? 25 to 30 years, as we had earlier discussed.
30 years, the lifetime of the equipment.
So approximately means, as you said, $2 million, so 16 odd crores we would be receiving every year henceforth.
Yes.
Okay. So, sir, from FY27, we have already done a 200 or 250 odd crores. So by FY27, how much revenue you should expect to accrue from this operation maintenance?
I wouldn't go that far. I did answer this question in the earlier, question put by Mr. Singh. So let's stick to this. I don't want to go to 5 years and 7 years. So let's stick to that. Then we'll double our turnover in 3 years' time. And from the FY2027, that's a golden period will kick in where we'll be able to encash on all the investments that we made in projects.
Okay. Thanks a lot, sir.
Welcome.
Thank you. The next question is from the line of CA Varun Agarwal, an individual investor. Please go ahead.
Thanks for the opportunity. Congratulations on the consistent top-line growth. In this year, FY25, how much revenue do we expect from exports?
It will be 50% of our turnover.
Okay. Thank you and all the best.
Thank you. The next question is from the line of Parikshit Kabra from PKD Advisors LLP. Please go ahead.
Hi. Thank you for the opportunity. First question, I just wanted to understand, we missed our guidance for this year, and I guess that's mostly because of the performance in H2. So any commentary on what we saw in H2, why things played out the way they did, and why even the margins dropped? And the margins dropped, I know, because of the marketing cost, but beyond that, was there any other marketing price pressure, or was that the only reason?
No, nothing. I wouldn't say, because if you look at the marketing expenditure, it was almost close to about 4.6 crores. So that's the only factor which needs to be considered.
Got it. And revenue, sir?
I'm sorry?
And what about the revenue? Why did you miss our revenue guidance?
We didn't miss our revenue guidance.
Sir, I believe for FY24, we are given a guidance of 30% growth.
No, I don't think so.
Okay, my mistake. So this is on track with what we wanted, or was this an underperformance this quarter, this half year?
We were happy with what we achieved, and of course, who's happy with what they have? So we would have loved more to come in, but there are certain hurdles, limitations, and considerations that you have to make. But we were happy with what we did. We are happy with what is happening now, and we are very, very buoyant, to what is coming in the future. We see a lot of traction to the work that we've done so far. Participating in 8 exhibitions, it's not an easy feat. It's very cumbersome. It is very tiring. It takes a lot of energy, takes a lot of resources, and it is not only one location. You are traveling around the country. You are traveling around the globe. May it be Egypt, may it be Houston, may it be Russia, may it be in extreme weather conditions. So you are doing it, and I see a great potential. And wherever we have participated, we have got tremendous response. I can tell you, not because of Sealmatic, but because the kind of story that we have to say, a story that is compelling to our customers. And we will see these results coming in the next 18 to 24 months period of time, that we'll have many other global accounts coming to Sealmatic.
Fantastic. So that's really great to hear as an investor in your company. I really appreciate that. The other part I wanted to ask, sir, I know you don't want to talk about multiple years into the future, and neither do I. But I understand that the O&M revenue from the things that we have already sold starts kicking in about 24 months after installation. Correct, sir?
36 months.
36 months, not 24 months.
No, it takes, because projects like a refinery. So, there are a lot of challenges, hurdles, not from our side, but from the site. There are a lot of bodies involved. The EPC like EIL, the OEM like a KSB. Then we end user like IOCL, a steel company like us, and many other contractors. So at the site, it's a humongous effort where, on a daily basis, almost 12,000 workers are employed and doing the site. So, typically we have experienced in this, journey, that it takes about 3 years from the date of supply for the, plant to get commissioned with our mechanical team. And that's when the business will start kicking in, which is profitable, which we call the end user business, which we call our bread and butter.
Got it, sir. So 36 months, if we assume, would it be fair to say that some of the projects that we have sold in 2020 and prior to 2020, some of the O&M revenue would have started, coming in FY24 itself, or if not FY24 and FY25?
No, Mr. Kavra, I think you missed my deliberation when I was talking on the earlier gentleman. Our OEM and project business only started in 2022. So, we started approaching the OEMs to get ourselves in the project business. For that, we need to get approval from EIL, which is the mother body. So that came in place by the end of 2022, and then 2023 onwards, we started participating into projects. So whatever orders we would have got would be in the middle of 2023 and the end of 2023. And those orders are now being supplied and will get commissioned. Say by 2026, that's when I always say our golden period will start. So 2026 onwards, our seals will get commissioned.
Got it, sir. And so my last question is that I know you said that the India TAM for our business was 1,900 crores. Is that 1,900 crores of new tenders for seals that comes out every year, or does that also include O&M and other things? And because from what I understood, the number every year of new seal orders that comes out in India is between 100 to 150 crores. Is that information correct, or is 1,900 the correct number?
I would say the ballpark, I would agree with you on that. But every year, there are no tenders coming out as such. These are proprietary items, so these are not, items which are tendered. So these are done by pure solicitation, by visiting customers and, fulfilling the requirements.
Perfect, sir. So in that case, when we have 50% of our revenue coming from India, which is about 35 crores from India, if we grow at 50%, 60% next year, then we would already be about 40 to 50% of the new orders that come out in India. Is that really going to be our market share?
No, not really. I think probably let me try and explain this to you. When I say, forget the market share. It is too insignificant. You just cannot take it. You just started out in 2 years' time and you say, I've got this X percentage of market. I don't believe in that number at this moment. I can only be qualified to say I've got a market share after 5 years down the line. But let's say that's our endeavor and we are working towards it. Then any new firm is being built for a project. We want 15% market share of any new firm. Say a firm which is being delivered to ISCL, BPCL, HPCL, Reliance, NTPC, Nuclear Power, GAIL, ONGC. We want 15% of that share.
Got it, sir. But so that's what I'm not able to understand, sir. If the new orders are between 100 to 150 crores, how are we saying 15% with almost 35-40 crores of revenue from India? That those are the numbers that are not able to reconcile. Is that TAM number underestimated?
No. When you are saying a particular number, you are taking the collective incremental growth, so which will also include the end user business.
Okay.
Right. When you're saying 200 crores, the market has increased over the previous year, that would also include the end user business, which would come in, right?
Okay, sir.
So, new project would be say close to about say for the sake of just a discussion, say 75 crores. So what I'm saying, I want 15 crores of that, say 15%, of that particular new growth. Which is actually profitable and which is actually a meaningful business for us. For us, our bread and butter would only come from oil and gas, refinery, petrochemical, nuclear power plant, and so on. And that's our focus.
Okay, sir. All right. Thank you, sir. Thank you for your time.
Welcome, Mr. Kavra.
Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Yes, sir, you're audible. Please proceed.
Okay. Yeah. Thank you very much, sir, for this opportunity. Just first, just a clarification. I think you mentioned if you have to exclude this project expenses or some marketing cost, what would have been our profit in FY24?
Ratan, can you answer that, please? If we would exclude
if we exclude it, we have earned the profit before tax is 18 crore.
18 crores net profit you're talking about, PAT.
Yeah. No, this is profit before tax.
PBT. You would have been 18 crores of PBT and 28% of EBITDA margin that we had guided earlier, right? Okay, understood. And when we are saying that for FY25 we are looking at 25 to 26% of EBITDA margin, so you have already factored in any such kind of cost that may come in FY25 in terms of any marketing or project expenses that you need to account in your P&L?
Mr. Poddar, I think I've answered this question to the previous gentleman as well, but I'll still repeat my answer that the exhibitions that we participated, some of them very important ones and which are more expensive, are only happening once in 3 years. So those won't get repeated. So probably, we'll see a much lesser expenditure on exhibition. And what we did in the last year, when we wanted to, set a footprint and wanted to make awareness, so we participated in many exhibitions in territories where we were not physically present. Now, having done that, we don't feel the need that we need to participate any further. Only we will do in select exhibitions. So those expenses will come down.
Okay, yeah. I think you did mention that your marketing expenditure will be lesser, but when whatever we are guiding would be after factoring in all these kind of expenses, right?
Yes, of course. Yes.
Okay.
So why I'll say is I'll still be, buying projects, right?
Mm-hmm. Correct.
The projects, when you buy a project, these are, at below cost. So that investment will keep happening. If I don't do that, I will become stagnant as a company. And my business is purely based on the installed base that I have in any geography, whether it's India or the Middle East or the America. So I need to increase my installed base. So that can only happen by buying projects.
Correct. No. So that is fair point. I'm just trying to reconfirm that the margin of 25-26% that we are saying would be after factoring in all this incremental expenses that can come, right?
Yes, between 24 to 26.
24 to 26. Okay.
Yes.
Not 25 to 26. 24 to 26%.
Yes.
Okay,
Yes.
that's very clear. Now, secondly, what would be our current order book?
We are on track. I think I did answer this question to the earlier gentleman as well. So when we talk about 20% increase in order book, we have a slightly higher order book at the moment.
Just 20% growth in order book. So in rupees crores, I was just looking at a number. What is our current order book?
Our current order book will be more than 45 crores at the moment.
At 45 crores. And we are expecting 20% growth in order book intake in FY25.
Yeah, this is what I'm saying is including the 20% growth.
Okay. Got it. And I think you also mentioned in 3 years we are looking to double the turnover, right? Now, if you have to extrapolate that FY25 itself, we are talking about 60% plus growth, right? So 3 years doubling ideally means FY26 and 27 we are talking about very low growth. Is that what we are trying to imply? After 60% plus growth this year, we would be seeing a low growth in FY26 and 27?
Yeah. So when we say we are going to double our growth, then let's take the base at 71 or 72 that we did. So we are talking about 150 crores. That's the minimum that we want to achieve, but we want to go beyond that.
Correct. And 60% growth we have already mentioned for this year.
I'm sorry?
60% plus growth we have already mentioned that we are looking at for FY25.
No, we have not mentioned that anywhere.
No. So in your opening remarks, you mentioned, I think, FY25 we are on track for 60% revenue growth, right?
No. 20% growth we have said. I don't see.
Not 60%. We are talking about 20% growth. So I'm a little confused. So can we just reiterate that for FY25? What is the growth we are looking at?
20%, I said.
20%.
Yes.
Okay, 20% growth for this year and overall doubling our revenue by FY27 to around 150 crores, right?
Yes.
Okay. That's clear now. And what was the capex spend in the new capacity that we are integrating by maybe June end or July starting?
Let Ratan answer this question. CapEx expenditure. But can you repeat the question, Mr. Poddar?
So just the capex. I just wanted to know what was the capex involved in that new capacity?
Yes, invested in machinery around 5 to 6 crore in machinery. This year, sir.
5 to 6 crores
6 crore in machinery. We are already given the order for it.
Okay, and so 5 to 6 crores in machinery, and that is going to increase our revenue potential by about 65%, right?
Yes.
Okay. Okay, I understood. I think that's about it from my side. All the very best to you. Thank you so much.
Thank you.
Thank you. We'll take the next question from the line of Gautam Rastogi, an individual investor. Please go ahead.
Hey, hi. Am I audible?
Yes, sir, you're audible. Please proceed.
All right. Thank you. Thank you, sir, for giving me the opportunity. The first question that I have is, sir, could you let me know what portion of your sales in FY24 was non-API or non-project related?
Sorry, I didn't get the question. Mr. Rastogi, can you please repeat it?
I'm sorry to interrupt,
yes,
sir.
Yes.
Mr. Rastogi, can you please use your handset?
Yeah, absolutely. Absolutely.
Thank you, sir.
All right. Am I Sorry, am I audible now?
Yes, sir. Please proceed.
All right. Sorry, I apologize for that. All right. So, can you let me know what portion of your sales in FY24 is non-API or non-project related?
FY24, did you mention?
So what portion of sales is non-API or non-project related? Because not all your sales is API related, right?
Yeah, absolutely. Anything which is being exported out of the country is all non-project. I wouldn't say non-API, but non-project. So where we don't lose money, we make decent amount of profits. And anything which is happening here in India, where we supply to OEMs, it is a project business, and that's a business which drains our resources and which drains our cash flows. So that business would be approximately 20% of the turnover.
Understood, sir. So, and one thing, so in all in the partnerships that you have done abroad, through those partnerships, are you targeting the API business or the non-API business?
Primarily API business, because that's the area and focus that we have, because that's where we make money in a refinery or a oil and gas installation, a petrochemical, a power plant, both thermal as well as nuclear. So that's our focus area. Of course, we don't mean to say that other than that it is of not interest to us, but that's where we make the money.
Understood. All right. So, in your opening remarks, you had mentioned a series of market sizes in different markets across the world. So, are those markets for already installed things, or are they for like incremental markets, like 60 million, 40 million?
Yeah, these are for operation and maintenance market. Because when we talk about Middle East, so there is nothing which is happening as a manufacturing. So all the products are being imported and being sold over there. So like in the Middle East, you don't make a pump over there. All the pumps which are installed in the Middle East are being supplied from India. So that's purely highly profitable business. Highly profitable.
Understood, sir. So like, say, for example, for US, you mentioned the market of 1.25 billion, where you have done a partnership with Ecotex, if I'm not done getting the name right. Okay, so this 1.25 is for O&M. That's what you mean?
No, US is a manufacturing country, so there we'll have to be more specific. So the end user business would be say 70%, and the OEM business would be say 30%.
Understood, sir. This is helpful. Thank you.
My pleasure.
Thank you. The next question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead. Mr. Singh, I have unmuted you. Kindly proceed.
Hi, I'm audible?
Yes, sir.
Yeah, thank you for this opportunity once again. Sir, so firstly, I want to clarify one thing. When I asked you for the guidance of growth in FY25, you mentioned that we will be doing exceeding 60% plus growth in revenues. But to one of the previous participants, you mentioned that we would be growing at about 20%. So can you please clarify that first?
I've just clarified this to the other gentleman. I don't know from where the 60% has come.
All right, sir. Got it. So secondly, I want another clarification on one of the questions asked by one of the participants. So as a layman, I just want to understand that you mentioned that we got an order of 15 crores for which after 36 months of order, we will start generating additional 15 crores annually for the O&M. So is that understanding correct?
Yes.
Sir, so, I mean, what kind of orders? So, for example, currently our revenue is about 70 CR for this year. So going forward in the coming 3 years, can we expect just the revenue from the O&M to be about 70 CR annually?
Yes.
All right. So after 36 months, we will just be generating 75 CR just from the O&M on top of our new business. So that is the correct understanding, right?
Yeah.
All right, sir. So basically, all of our orders, I mean, whether it's an end user or an OEM order, for all of our orders, we would be having this O&M revenue generation after 36 months. Is that understanding correct?
Yes. That's why we do, so much of, lobbying and, PR activity with various OEMs and EPCs. So to get ourselves inside a project, and once you're inside, you don't get replaced in the lifetime of the equipment.
All right, sir. Got it. So that would actually mean that there would be a quantum jump in revenues since we started this in 2022, you mentioned. So there should be a quantum jump in revenues by 2025.
26, I would say, if I say, that's what I've said in many of my earnings calls, prior to this one. That's my golden period. That's what I call my Chandragupta Maurya period. Would start from April 2026. When, all the hard work that we've done will get commissioned and we see spare part business kicking in. Are you there?
Mr. Singh, yeah. Mr. Singh, you're not audible, sir. So the participant has left the queue. Participants who wishes to ask questions may press star and 1. As there are no further questions, I would now like to hand the conference over to Mr. Umar A.K. Balwa, Managing Director of Sealmatic India Limited, for closing comments. Over to you, sir.
Thank you so much, Michelle. And I see 57 participants. And I thank everybody for taking their valuable time and attending this earnings call and also asking questions. And while answering these questions, it also brings a lot of confidence when I'm trying to answer those questions. By this question, I feel that I'm on the right path in my journey for making Sealmatic as one of the leading companies, not only in India, globally as well. So I thank you all for your attention and look forward to your continued support and trust forever.
Thank you, sir. Thank you, members of the management. On behalf of Sealmatic India Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.